Hi, this is Cora Stack here, Dr. Cora Stack. I'm trying to look at Bernie Sanders, um, stuff on X, and I'm trying to see, where it's coming from, and it's also happening in Ireland, as I was saying clearly. All you have to do is go into any retail or any business or talk to any public servant, and you'll hear the stories. They're at crisis point, and is there anybody listening? So let me try and explain why people are so squeezed. So is Ireland, I had, a past in economics, is Ireland quietly transforming wealth upwards, the hidden cost crisis explained. So Ireland is wealthy on paper. It's strong GDP, that's gross domestic product, budget surpluses, global tech presence, corporate tax surpluses. But many working households feel something very different, and students and people on their own, and a huge amount of the squeeze middle are feeling incredibly squeezed. Well, let's look at why that's happening. Not sudden collapse, not dramatic crisis, but a constant low level financial pressure, and it's like this over time, going like this. So the real question is, are we witnessing a quiet transfer of wealth upwards? Let's examine the question. Energy, the obvious pressure point. We had there the other day, a few days ago, 320,000 households were in electricity arrears last December. We're only just, we're going to have another few cold months. Energy prices rise immediately when wholesale markets spike. They fall slowly when markets stabilise. Later on, carbon tax increases, standing charges, VAT, that's a value-added tax, applied to rising prices. When base prices increase, VAT automatically increases too. So you have that extra price increase. Revenue is protected, margins are protected, volatility is transferred downwards, household absorb it. Ordinary working people absorb the shock and all the extra cost. Petrol, tax stacking and lag pricing, same thing. Petrol follows the same logic. Oil rises, pump prices rise quickly, after the budget, immediately the night, the 12 o'clock p.m. You'll see it on the oil falls, reductions are slower, excise duty remains, carbon tax increases, VAT stacks on top, two extra taxes there. The driver, the ordinary worker, again carries global volatility and domestic policy layering. That's the domestic taxes. Phones and broadband, the inflation clause. Most mobile contracts now include inflation-linked annual increases. You sign once, your bill rises automatically every year. And if you're late at all, fees, extra fees, extra fees. Broadband pricing uses introductory discounts. Then there's an automatic jump, bundle complexity, equipment rental charges. I mean, all of this is all part of the package, inverted commas. Switching is inconvenient. Markets are concentrated. Inertia becomes revenue. The subscription shift, you no longer own anything. We're moving from ownership to permanent rental. Microsoft turned Office into Microsoft 365 subscriptions. Adobe eliminated perpetual software licenses. Google monetizes storage, premium tools, and workspace tiers. You don't buy software anymore, you rent access, monthly, indefinitely. Streaming platforms, the escalator model, Netflix, Sky, Disney, Spotify, etc., etc. The pattern is consistent. Low initial pricing, habit formation, comes like a drug. Platform lock-in, gradual annual increases, new premium tiers, ad-supported downgrades. Each increase feels small. Over 5 years, they compound significantly. Because distribution costs are low, much of that increase becomes margin. Banking and mortgage, risk transfer. When central bank rates rise, variable rate mortgage holders again feel it almost immediately. Deposit rates rise slowly. That gap is margin. Interest rate risk moves downwards to households. Institutional balance sheets stabilise upwards. Insurance and AI risking pricing. This is something I'm interested in now, is the whole way AI works in terms of risk pricing. Insurance pricing is becoming algorithmic. AI systems now segment risk precisely, predict claims probabilistically, using probability models, adjust premiums automatically. You are not just part of a pool, you're simply a data profile. Algorithms optimize for loss minimization, margin protection. They do not optimize for temporary hardship, personal context, social solidarity. If segmentation becomes too granular, insurance shifts from shared risk to personalised pricing. Those who most need coverage may face the highest cost. Human discretion shrinks. You receive a renewal number, you pay or you exit. The hidden charges we overlook: standing charges, service fees, subscription creep, cloud storage upgrades, childcare increases, waste charges, transport costs, AI feature add-ons. No single increase collapses you, but together they completely reshape disposable income. This is cumulative extraction. Who takes the risks? Working households. When oil spikes, you pay. When rates rise, you pay. When inflation rises, your contract adjusts upwards. When AI predicts higher risks, your premium increases. And what are the bases on which AI predicts the higher risk? That's the question. And what kind of human judgment is involved in that determination? When platforms mature, subscription costs rise. Income is relatively fixed. And if you even all of those, and you put in housing and rental costs as well, and those increases, it's pricing systems are flexible upward. Who captures the margin? Energy providers, telecom operators, banks, insurance firms, global tech platforms, institutional asset holders, not necessarily illegally, but structurally. Modern pricing systems are built to adjust upward automatically, adjust downward slowly, segment risk precisely, reduce negotiation space. Efficiency increases, inverted commas, household stability decreases. The social contract question. Ireland once rested on three stabilising pillars: work provided security, home provided rootedness, community provided belonging. But when essential costs escalate unpredictably in the manner that I've described above, when renewal letters create anxiety, even if you've paid and you'll get a letter and then they'll say, well, it's automatic, it's circulated out on this day and, you have paid, etc. Apologies, but these are all just, these are sent automatically. When housing is unstable, when digital life requires endless subscriptions on which many are dependent for their basic work now, security weakens, financial strain leads to less participation, less volunteering, less civic engagement, and more isolation. And we have the highest incidence of loneliness and isolation in Europe. Is it any wonder when people are living with this sort of pressure? We have the quiet feeling of being financially exposed, and that's understatement. So the core question: this is not anti-business. Markets matter, innovation matters, but essential services, energy, finance, housing, communication are foundational. If risk continuously moves downward while margins consistently stabilise upward, wealth transfer structure. So you can see how it all happens very, very incrementally. And who is in charge of the regulation here, that so many of these can put up their margins or their costs incrementally every year, and that everyone is doing it in a kind of hidden small way, but it's putting a huge overall strain on ordinary. And who's responsible for the regulation of this brutalisation of the ordinary person? It happens quietly, gradually, legally. So the question isn't, is Ireland wealthy? The question is, do ordinary households feel secure within that wealth? But when standing still becomes more expensive every year, something fundamental is shifting. And we need to decide, is this simply the modern economy, or is it time to rebalance risk, reward and regulation? This is the real debate. And the question is, why is this not a central question every week in the Oireachtas? It's shocking in the extreme what people, ordinary working people, are having to, the amount of pressure they're having to take because of all of these hidden costs being put on them. For what reason, and who are the real beneficiaries here?